Anyone with an internet connection can access the exact formulas for budgeting, debt repayment, and compound interest. The spreadsheets and calculators are everywhere, and the best part is, they're completely free. But if the blueprint for building wealth is public property, the lack of millionaires isn't a math problem. If it were as simple as following a set of instructions, financial independence wouldn't be such a rare outcome. The difference lies in the operating system running in the background. Billionaires process information through a specific mental architecture that looks nothing like the one most of us were taught. Changing your financial trajectory requires more than a new budgeting trick. It requires rewriting how you calculate risk, time, and failure. Consider how an average mindset evaluates a major commitment, like a 20-year home loan. Usually, the analysis stops at the first-order consequence. Can the current salary cover the monthly payment? This diagram shows the wealthy path, where the evaluation moves into second and third-order consequences. They look past the immediate purchase to see how that decision ripples through the next decade. That affordable mortgage creates a hidden constraint. It ties you to a specific salary and a specific location, effectively killing your ability to take a high upside risk, like joining a startup or launching a side project. This graph represents the standard career path. As you take on more responsibility, your risk and your reward grow in parallel. You work harder for a slightly higher bonus, but the relationship remains linear. The wealthy focus on asymmetric bets. Once basic survival is guaranteed, they look for opportunities where the downside is strictly capped, but the potential reward is exponential. They aren't trying to work twice as hard for twice the pay. They are looking for the point on the curve where a manageable risk yields a disproportionate return. This resilience extends to how they handle chaos. While a fragile system breaks under stress, an anti-fragile mindset uses volatility to gain an advantage. This concept, popularized by author Nassim Taleb, suggests that some systems actually require disorder to thrive. In a market crash, standard thinkers see a catastrophe and retreat. The wealthy see a stress test that reveals which assets are overvalued, allowing them to rebuild their portfolios with stronger, cheaper foundations. Beyond handling chaos, there is the discipline of the boring compound. Most people quit a new venture as soon as the initial excitement fades, but wealth is built in the plateau that follows. Look at this image from the start of 2020. During the pandemic, there was a massive surge of people starting new digital projects and businesses while the world was on pause. But as the isolation represented by this empty street dragged on, most of that energy disappeared. The winners weren't those who started with the most enthusiasm, but those who kept doing the repetitive, unglamorous work long after it became mundane. Lasting success is rarely the result of a single brilliant move. It's the result of outlasting everyone else through years of agonizingly consistent execution. Executing that long-term plan requires a complete separation of ego from the bank account. While most people use money to signal status or react emotionally to every news headline, the wealthy practice emotional decoupling. This chart captures the daily volatility of the market. To an emotional investor, these jagged drops feel like a crisis that requires immediate action. But when you zoom out, that entire week of panic becomes an invisible dot on a decades-long upward trend. Strategic wealth depends on the ability to remain invested in your long-term conviction while everyone else is reacting to the noise of the present. Financial success is an exercise in psychological endurance. The math provides the map, but your ability to handle boredom, risk, and ego determines if you ever reach the destination. By internalizing these frameworks, you build a level of professional and personal autonomy that is shielded from the typical cycles of panic and survival. The ultimate goal of this pursuit is the freedom to make decisions without the pressure of a monthly balance sheet or the fear of economic shifts. Stop looking for the next financial shortcut. The most significant gains are found in the slow, difficult work of upgrading how you think. Hit subscribe and click the bell icon for our next breakdown.